Hey guys, per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So this week I put out 2 articles, one on Maker, one on Litecoin, Liddycoin, Rockcoin, whatever you want to call it. Highly recommend looking into Maker, even if you don't read this article. Nothing really made me think about ETH and dApps like Maker did, and it helps you understand the tether issues and how those might be fixed, and benefits and cons from using something that isn't Tether. So I checked that out, should you be interested. Litecoin, not much really to say, other than the dev stuff is slow at the moment. I expect that to pick up drastically with this summit. There's probably going to be some headlines based on the chart being long ETH into the summit. Probably not a bad idea. But again, not investment advice. I don't hold any currently. Alright, so let's go from most silly to least silly on the charts. This is the moon phases, the full moons, as it were. Now, I could not tell you what up moon and down moon mean. I'm sure you can read more about it and let me know. But generally, when there's a full moon, you expect periods of volatility and or price reversal. You can look at this and study it and tell me what you think. Just something to think about. It is weird. I'm not saying it's actionable in any way, shape, or form, but it is weird how price moves around full moons. I don't know why. Something to think about. Alright. 2-day 5200 EMA. I've been watching this for a long time. My thesis is that if this does not cross bearish, we are headed for mega bull, mega bull. Because when EMAs cross, look like they're crossing and don't, there's usually like a drastic response. If you look in 2015 on the daily 5200, you'll see what I mean. The 5200 was expected to cross bullish and it didn't, and we got a mega dump shortly thereafter. These are long shorts of Bitcoin on the hourly, and you can see shorts just fading away slowly as we rise up in price here. Kind of a cool view to see that happen in real time. It's better if the price rise is not due to shorts covering. So when you're short, you sell and you buy back at either a higher or lower price. So if you're closing a short as price is rising, the question becomes, is it a short squeeze? Like, are we causing shorts to close because price is rising and then more shorts are closing and then yada yada yada. It doesn't look like too many longs are opening, but if people are just buying on spot, that's generally the best. Margin is not always a good thing in general, but it can fuel, it's the fuel for things as well, so it goes both ways. Wyckoff, I post this every day, no surprise, no shocker what I'm going to say here. I think the falling wedge is technically more valid than the Wyckoffian roadmap. The roadmap has fit extremely well. I recently added the yearly pivot back onto this just because if we head up here, it's just another confluence factor to chill out in this zone. If you'll remember, we hit the yearly pivot exactly dead on twice before the descent. And yeah, falling wedge is bullish. Lower highs, lower lows, bouncing. This whole phase D, completely arbitrary. So before you give me any shit about it, I'm not saying this is going to happen. I'm saying this is how it might happen if it happens. I'm expecting it to happen, similar to this. That's why I put it on the chart. But it does not need to happen like this. If anything, Wyckoff is more bullish than me. Wyckoff accumulation kind of just goes straight up into the new accumulation zone with the sign of strength. So this is just saying, like, I'm paying attention to local highs here. It's probably not going to go straight up. It's probably going to chill, pull back, test support, blah, 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 whatever. Something to think about. CME futures dates, I don't really know what to say about this other than pay attention to them. Very similar to moon phases. The beginning and ending dates of these contracts is important for just like futures and how futures work, who's paying attention to price at what time. You can see we're headed into Labor Day weekend in the US, so that might affect things weirdly. Back in the day when China was at the table, price loved to move violently on American holidays. They're not here anymore, so who knows. But just something to pay attention to. Basically what this is showing is that the first contract available ever was a massive short. The current bi-quarterly, I don't know what that's actually called, half a year contract, 6-month contract. So if you can't tell, these are like what, 3 month, 3 month, 3 month, 3 month, and then 4 month or something, 6 month. I can't remember, even by eyeballing it. But these are the same type of contract, and then these are also the same duration. There's going to be another one after September 28th. But you can see we're in a zone of pay attention time as far as what these contracts have been doing. This current contract is basically break even. I don't know what that tells you, if anything, but it tells you if you open a trade here, long or short, and you held it all the way to the duration, it would have been exactly where you started. Let's take a look at Cloud on the daily. I'll come back to Cloud on the daily in a few charts from this, but I'm looking at Wyckoff, I'm looking at Cloud. If this plays out like it did in 2015, the Cloud certainly is set up for that. We have a long flat Kumo, prices ranged flat for a while. We did not have this high volume spring spike. We had basically double inverted head and shoulders on all-time high shorts bring us up here. So I'm expecting 78, 7900 in the near term, within the next month for sure. What I would like to see first to be more confident of that would be the bullish TK cross, which we're far away from now. It's currently bearish. But if we don't make lower lows, which I don't expect we will, we should be fine for 78, 7900. No surprise from where I'm sitting anyway. I'm not in the 3K camp. 4 hour 5200 is cross bullish. Last time across bullish, we had a nice little run. I'll talk about fractals in the next few charts, but if I was trading a bull trend here on the micro level, I would definitely be using stops on like the 4 hour time frame, and I'll show you what that looks like. Here is the 2-day again, and if this is the first time you're seeing this, you're like, this is a bunch of colors that are crazy, and he's full of crap, and blah blah blah. So these are called harmonics. They go by different names based on how they're drawn. I'm not going to explain how to draw them in this video. You can Google other videos. I have a video on it. But basically, as soon as I see 3 points, so 4 points. 1, 2, 3, 4, 5, yeah. Okay, so as soon as you have 4 points, which we do here, we have an extreme high, a low, another local high, a low, and now the question becomes, where does this go from here? I'm doing this 2 steps ahead. Harmonics should be drawn after you get the 4th point. This helps me look for positions before days and days before they happen. So this would be October, maybe this would be November, I don't know. Q4 has been bullish for Bitcoin going back many years now, so I don't expect that to change. Again, that matches the narrative of Wyckoff, falling wedge, blah blah blah, as does all these harmonics. So depending on these patterns, depending on what they draw, what the 4th point is here. First I'm saying these are the 4 possibilities. The next thing I'm saying is, as soon as we get to one of the first 2, if we do, a 50% pullback is highly likely. If we get to this one or this one, same thing. I'm just showing where that pullback is going to be. So this gives me a roadmap for the next couple of weeks at targets. So if we get like, I don't know, a tweezer top at this level, if we get on the 1 hour head and shoulders, if we get any sort of reversal pattern, if we get a spinning top like we did here, if we get a shooting star, which is like an inverted dragonfly, if we get a hangman candle, if we get anything like that in one of these zones, then I can say with confidence that maybe I should close some of my spot positions, maybe I should short on leverage, blah blah blah. Like, it can help you decide. Again, this is not deterministic, it's probabilistic. I'm looking at what might happen and when. If you know more about harmonics than I do, which is probably most people, let me know what you think about these, because I'm just drawing what I think I see based off of a cheat sheet, basically. Okay, let's close this out with a few cloud charts and then 2 ETH charts. So the best way to chart, in my opinion, in most people's opinions, zoom out then zoom in, okay? So I'm on the daily, I have my narrative of my cloud. I trust the cloud more than I trust anything or anyone in the world, okay? So let the cloud draw the support resistances for you. listen to the cloud. I didn't listen to the cloud very well here. These are perfect entries. Here's a shooting star, by the way. This one was, you know, whatever it was. But the point being, it hit that Kijun spot on. 2 daily closes in a row, okay? Spot on. All right. So that's my spiel on believe the cloud. We're looking at Kijun resistance, cloud resistance. The other part of the narrative is that long flat Kumo equals price magnet, and it's just going to hoover that price up, ideally. So I draw those resistance points on the chart. I leave them on the chart. I also like oscillators on lower time frames because it helps me figure out, is there a bear div? Is Stoke crossed up or down in one of the extremes? Stoke is like an indicator on RSI. It gives you momentum within momentum. That's my understanding anyway. Okay, let's go to 4 hour cloud. Again, all those levels are here, and oh, what do you know? This level sort of makes sense now. We got the failed W, we got the VanEck announcement, delay, 30 million in shorts, blah, blah, blah. So all these shorts that opened on that Genesis, 30 million, whatever, blah, blah, blah. They're basically a break even now, or they've closed. Whatever, that's fine. I'm looking for divs. I'm not seeing higher highs with lower low in momentum. So if higher high in price, lower low momentum, not seeing that. Seeing Stoke at the bottom, that's good. That says we've consolidated here likely enough. If this crosses like it did here and we cross this 20 threshold, then that just says momentum is turned bullish again. Okay, that's just how I see it. I also have fractals on here, these little hats. So if we get a high and a low with an extreme high, you get a bull fractal. If we get an extreme low, we get a bear fractal. The idea is, in a bull trend, you should be breaking the bull fractals. In a bull trend, you should not be breaking the bear fractals, this red one. That's why I put a support here. The other part of this is you're constantly paying attention to the Kijun, the 4 hour Kijun being giant support here. So if everything fails, it says we're very likely to bounce at this level at 6,700. Again, this is a little zoomed out for me. You don't really need to pay attention to 4 hour every minute of every day. There's only one candle every 4 hours, right? I do like watching the 1 hour and the 30 minute. And you can see we had the bounce on the Kijun bounce. We had some Stoke stuff, which I don't really pay attention to on the hourly too much. But in general, we're still trending up. That's good. And all my lines are still in here from the daily. Here's the 30 minute. And I like the 30 minute in this case because it shows me a complete out of a trade here on the bearish TK cross. So if you're long down here, you're out up here. And you're waiting at this point. You're waiting to get back in. What does get back in look like? It looks like a bullish TK cross with price above cloud. It looks like a break of 71.30. The other part of this being support is to way down here. If we break 69.20, 69.20 should be a hard out for any leverage positions that I'm watching as an example. 66.85-ish is where bids should be. I like to scatter bids plus or minus a few bucks just to catch stuff. Like you can see here, I consider this a Kijun bounce even though it didn't technically touch exactly, which is why you always want bids scattered around that area. Another thing you're looking at is the 30-minute Stoke. You can see across here on the low, you got some momentum up. The problem with buying here is that cloud didn't make sense at that point. What you want is, like I said, to get cross above cloud, put price above cloud with the 30-minute Stoke at the bottom. That's when you know when to buy. Very similar to here. You can see that this actually was way before any of this. Not so much here. Like it's not 100% when trend isn't perfect, but something to watch in the beginning, especially when you're out of any leverage positions or whatever. All right, so that's the Bitcoin. Let's move to ETH, which has been a sad panda this past week. Really expecting it to mean revert hard, like plus $100 from here, basically. I really like the 12-hour cloud because it was sniper dead on the money for a short from the top at 440, 450, whatever this was, with a break of the bearish fractal. So that just says the momentum is there, and then you're just getting Tenkin rejections. So what I'm seeing now is C-clamp, separation of the TK disequilibrium, with a potential for Adam Eve, with some breaking of the bull fractals. That's why I have these lines here. So now if we break this level, we should be good to go. If we break this level, we re-short. That's just what I'm looking at. I like the descending volume profile. Getting a nice flag, equilateral triangle, whatever. I think in general this is bearish continuation, but we'll see what happens. It's a bit conflicting based on cloud versus chart pattern. I don't know. Anything above 320 completes the Adam Eve, which would propel it back to like 410 or something like that. You'd have to measure that out. But 382 is pretty likely based on the cloud. And then daily wasn't super great at the bearish TK crosses, but it actually got you out even earlier. It got you out at 600-ish, and it just told you to stay out this whole time. And again, you're expecting mean reversion to 380, 520. That's why I like the next step up time frame, because it gives you the next support resistance. All right, that's all I have for this one. Like this, comment, share, subscribe. Hit me up on Twitter, and happy trading.